Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Friday. We made it to the end of the week. What's going on today in the markets? Dow's down about 400. Nasdaq's down about 200. We're having a down day. Okay, so we've had this drop. We were up around the 4,200 level, and now we dropped down to the 3,950 level. About a 6% drop on the S&P, right? Well, right here we got a lot of support. The 50-day moving average is right here. The 200 days right below it. There's support right here, and we're probably going to get a bounce up. Now, what I like to look at, okay, we dropped about 250 points. I think the bounce up will be about half of that. We'll probably bounce up somewhere around 100 to 120 points. So look for it to bounce from 39.50 up to 40.50, right about there, maybe 40.70 on the high side before we head lower. I think we're going to still take out the October lows, which is down about 20% from here, down around the 3,400 level on the S&P. But there are those gaps. We've been gapping down. Sometimes they'll rebound to fill the gaps. The S&P will rebound up to right 4080, maybe 4100 on a high. But then we're going to head lower. We're still going to take out those October lows. Of course, this is only my take. Your take may be completely different. All right, let's move over to the real estate market now. Okay, so Toll Brothers, one of the largest builders in the United States, they came out with earnings, okay, and they beat the expectations. Now, the expectations really weren't that high, but they beat the expectations of the earnings. And the CEO, he comes out and says the housing market continues to show signs of rebounding. Okay, that's his first statement. So he thinks the housing market's rebounding. Since the beginning of January, there's been this increase in demand. Now remember, okay, so we were at about 7% on the mortgages. They dropped down to 6%, and that's where a little bit of that demand came in. But we're already back up towards that 7% level. So that demand that he saw is already dwindling. But he says that buyer sentiment is improving. Buyer sentiment, meaning people are more optimistic that houses will go higher. He says that inflation is receding and that there's a good economic outlook. Now, I don't know which economy he's looking at, but it's probably different from the one that I'm looking at. Okay, so now he also went on to say that because they sell $1 million homes, they sell about 2,000 a quarter, right? 2,000 homes, and their average price is about $1 million. And because they sell the $1 million homes, that their buyers are more sophisticated, and they know that they'll be able to refinance later when the price goes down. So their buyers are not afraid to jump in and pick up these $1 million homes. Now, it's very fascinating to me. I mean, it's kind of like he's trying to put lipstick on this pig, but there's just not enough lipstick out there. I'm telling you, this housing market is an ugly pig. You can't make it beautiful. It's going to come down. Now, what he's talking here, how he's talking, seems like it's all propaganda, but it's a little bit more than that. It's a little bit deceitful propaganda, and the media does that. The media, they'll still come out and they'll say, well, year over year, house prices are still high, higher than they were a year ago. Well, let's start from June of last year till now. Oh, they're down about, 12%. But we don't want to say that, so they won't be able to say this year over year number very much longer. Now, when I talk about 50% off in the housing market, I get a lot of pushback from that. Everybody says, but Mike, my area is special. We could never drop 50% in my area. And my reply is always asked, well, did your area go up during the pandemic? Did you have that 20% increase a year? 20%? Are you up about 40%? Oh, we're up at least 40%. Everybody wants to live in our special area. Well, that may be great, but look if you're up that much, believe me, you're going to come back that much and maybe more. 50% might be a conservative estimate, right? Okay, now that's just my take. Look, we've had the boom, and I agree with that. We printed $7 trillion in those 2 years, and the houses boomed, right? They boomed upward, but that's going to be all reversed. You see. Now, why is it that I'm so negative on houses? I'm really not negative on the real estate market. I just think that there's going to be a lot better opportunity coming your way. Now, if you buy here, you're going to be riding this downward, right? And wouldn't it be better just to sit back and watch the show, grab some popcorn, and watch how this plays out for the next year? Look, I'm telling you, there is not going to be a rebound in 2023, no matter what the Toll Brothers CEO is telling you. Now, here's why I say that. Okay, look it. Today, they came out with the hot inflation number again. Inflation's not done, right? It's not anywhere close to done. It peaked out at that 9% level, and it's come down a little bit, right? We're down to about 6.8%, I guess, is what they're telling you. What they're telling you, now that's a CPI number, right? 6.8% for the year is what they're admitting to. But it's going to rebound. It's going to get higher than 10%, probably higher than 10% this year. Inflation comes in waves. We've had wave 1, took us to 9. We pulled back to, that's called 6, and now we're headed back up. We had a hot inflation print. Okay, so what happens now? Well, the Federal Reserve, they got to pretend like they're fighting this, all right? They got to pretend they're fighting it. If they were really fighting it, well, they would just raise up the interest rate to 10%. Well, they can't do that because we default. Well, why not make the bank require a bank reserve? Right now, banks don't have a reserve. They can loan out as much money as they want. Why not let them have a reserve requirement of 30%? Well, that would solve the inflation problem, but the Fed doesn't really want to do that either. So here's what we're looking at. Here's why we're not going to have that rebound in housing anytime in 2023. All right, so we're sitting around 4.75% on the Fed funds rate, right? And because of this hot inflation print, it's all but baked into the cake now that they're going to raise 50 basis points their next meeting, push us up to 5.25, and the next 2 meetings after that, they're pricing in right now a 1/4 point for each of the following 2 meetings. So 50 basis points the next meeting, then 25 basis points and 25 basis points. So they're going to take it up a full percentage point from where we are now. So that's going to push us up to 5.75, right? 5.75. Do you know where the mortgage rate's going to be when we're at 5.75? It's going to be up around 8%, and that's if you have the 800 credit score. 8% mortgage rates. Now, in your area, I'm sure an 8% mortgage rate will not push down the house prices. Your area will stay up because it's a special area and everybody wants to live in your area. But I'm telling you, for most areas, 8% it's going to be like hitting the housing market with a big giant club. I mean, it's just going to put that downward pressure on it until it just finally falls. Right now, the sellers are in denial. I'll be the first to admit that. The sellers, they don't want to take anything less than what Billy Bob got. And of course, Billy Bob got out at the top. You're not Billy Bob. We're 10, 12% below that. And if you want to get out before the real pain starts coming, you see, there's been no pain yet. There's been no capitulation. This is kind of just like, 10%, Mike. That's nothing. That's nothing. It's going to bounce. It's going to rebound right back up as soon as the Fed pivots. Well, I'm telling you, the Fed will not pivot in 2023. That's going to be out in 2024. And you know what? After the Fed pivots, it's going to get worse, not better. Yeah, you may have a temporary bounce in the stock market, which may give some optimism to the housing market, but that housing market is going to come down. It's just going to drift lower and lower and lower until we get to that 40, 50% off. Now, I think we're going to go back to the 2012 prices, maybe even a little bit worse than that, but nobody believes we're going back to 2012 prices, so we'll wait till we get there, and then we'll talk about it. Might even get a little bit worse from there. Now, here's what's interesting to me. Now, you can measure how well the housing market's doing by the number of real estate agents that are out there in the marketplace. Now, a year ago, there was 1.7 million of us real estate agents out there trying to sell houses. Well, the houses, they've been cut in half now, the transactions. See, now the Toll Brothers, the transactions were cut in half. He was down 50% from where he was last year, but he's all blowing the optimism, all blowing that, the propaganda, trying to put that lipstick on the pig. He's trying to build it up, but he's off by 50%. So a lot of these real estate agents, the 1.7 million of them, these agents have already started to drop out. They've gone back to their other job, the Uber driver, if you will. I mean, like I tell you, I've been in in the Uber drivers. 2 of them have handed me their real estate cards. I mean, it's amazing. A lot of real estate agents do have another job because real estate doesn't pay them enough. Everybody thinks that us real estate brokers, we're rich, right? We're not rich. There's not enough transactions for everybody to be rich. There was 1.7 million agents a year ago. Now it's dropped down to 1.5 million agents. So 200,000 real estate agents have already left the business. They're out there looking for work with all those the tech people. The layoffs have been incredible. They just get laid off. 10,000 at a time, 10,000 each company, 20,000 some companies. Amazon, I think, is up to 20,000 now. The layoffs are coming. The recession's coming. It's going to put that downward pressure. Now, you see, everybody says the same thing. They always say the same thing. Mike, real estate's not going to crash. There's just no inventory out there. Well, first of all, real estate can crash with no inventory. When the buyers completely go away, and they almost have, when the buyers completely go away, if one person has to sell, just one person, the price comes down because real estate's sold on the margin, right? It's sold on the margin. It's not like everybody can't get out at where Billy Bob got out at. If even 5% of the people wanted to get out, it'd send the market down by at least 50%. And that's just with 5% of the people running in to get out. Now, there's going to be inventory buildup coming. And actually, in many areas, inventory is already surging onto the marketplace. In many areas, it's already up 100% year over year, 100% increase. Now, of course, not your area. Nobody sells in your area because it's such a special area where everybody wants to live. And I get that. I mean, your area is great, right? Well, but the forced selling is going to be coming. And of course, it's going to be coming to the other areas, and it would never be coming to your area. But when the recession hits, it's going to be a lot of forced selling. Forced selling can be a lot of different reasons, but the main reason is that they can't pay their mortgage anymore. They don't have money because they don't have a job. 63% of people live paycheck to paycheck. Take away the paycheck, they can't pay their mortgage. What happens? Well, maybe they go into forbearance. Maybe we kick the can farther down the road. That's possible, right? Or maybe the bank takes back the property and gives it to me. They call me up and they say, Mike, we want to get rid of this house. Get us out. You tell us what it's worth. You put it on the market. You get it sold. And that's what I do. That's my job. I went back in 2007, 2008. I was selling a lot of bank-owned properties. Okay, and we had a lot of what was called short sales. These are going to be coming back into the marketplace as negative equity comes back into the marketplace. Now, a lot of people already have negative equity if they bought within the last year. If they bought within last year, they got already underwater. It's gone down by that much. See, the average person's only putting down about 5% on the property. Now, you've got $1 million house and you put down 5%, you're $50,000 down. You're already $50,000 underwater, right? So not only are you $50,000 underwater, it's going to cost you another $30,000 to sell that house. So what do? Well, you don't want to sell it and you don't want to be underwater, so you just hand the keys back to the bank. That is now a bank-owned property. They call me up and they say, Mike, sell the property. This is for selling. This is where the inventory is going to be coming onto the marketplace, and it's going to be surging. In a lot of areas, it's already surging onto the marketplace. Now, of course, not your area, and I get that. That's perfectly fine. And I'm sure your area is a very beautiful place to live. And look, the whole real estate market's going to come under pressure, right? If your area went up by 40%. It's going to come down by at least that much. Once again, this is just my take. If you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. It's the weekend. Hit the subscribe button. I got some really good stuff to talk about next week. Get out there, everybody. Have a great weekend. Bye-bye now.